I think the biggest tailwind that's going to emerge in the next couple of weeks is around the central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. And as you know, the Fed's been shrinking its balance sheet since April 2022. It's been a pretty big headwind for market liquidity. The last time we had an end to QT, quantitative tightening, was September 2019. And if you look back at that period, the markets really responded well. I think within 3 weeks rallied more than 17%. So I do think the timing of QT ending, which is now essentially QE starting, and the Fed, and at a time when November kind of was topsy-turvy, so I think people got cautious, but now have to performance chase, and then you have a really typically a seasonal tailwind. So I'm pretty bullish into December, even with maybe the first day being rocky.
Today, as the recent crash in crypto has investors worried, with Bitcoin falling below $85,000, while Ethereum remains below $3,000, the crypto market remains in limbo. As crypto investors continue to speculate as to whether we'll see a price drop in Bitcoin and Ethereum in the coming weeks, this crypto cycle is heating up, and Tom Lee remains bullish, with a parabolic rise in the last few months of 2025. Forced selling, leveraged bets, and the usual tug-of-war we see when an asset approaches such a huge barrier. The bigger picture looks very different, though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors, who see its role extending far beyond speculation. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
I'd say that the shutdown put a blackout on data, and I think that created a bit of anxiety because, markets like visibility. But I think the inflation story is actually weakened a lot. So to me, the Fed would be cutting for the right reasons, which is, as they look at the next 12 months, the tariff inflation impacts are fading, but there's risk on the job market. So, I think it's cutting for the right reason, which is, real rates are tightening if they don't cut.
Here's what concerned me about a couple of weeks ago, Tom, with the market's behavior, and that was watching all of the AI high flyers dip and drop, and pretty precipitously in some cases, because it looked like the Fed wasn't going to cut. That raised questions about what was happening in the private markets, and it made me start to wonder, okay, are we looking at a lot of business models that don't work if the Fed doesn't continue to cut rates?
I think there was a bit of soul searching, Becky, in November, because we know leverage rose. And we know there was deleveraging in some markets like crypto, and we know margin debt's high. And I think that there was essentially a reset in November because the market had a 6% decline, but the AI stocks and the meme names and a lot of other names fell even more. So I think that position reset has been healthy, and I think many fund managers we talked to in November, in the midst of all that, kind of threw in the towel, thought the rest of the year was sort of a write-off. And now if December is strong, there's going to be a bit of performance chasing. And I think that's what you should typically expect in the final weeks of the year.
When we saw Bitcoin sell off and sort of the high flyers sell off on the notion that Powell got hawkish, and then Williams totally turned that around. And the Fed futures jumped, and it became clear they're definitely cutting again. And we got very little for that. Bitcoin should be back at 100 if it really is totally dependent on Fed easing.
Bitcoin and crypto have been disappointing because they really took it in the gut in mid-October and then kind of got hit again when, you're right, when the odds of a Fed cut dropped, Bitcoin fell. And then now that the odds have recovered of a cut, they haven't quite recovered. I mean, I think that that's still the lingering effects of that deleveraging that happened on October 10th. It's not that different than the wipeout that happened in 2022 with FTX. That took 8 weeks. So we're kind of emerging from that. That's 7 weeks in the rearview mirror. So maybe in another week or two, I think crypto has fully washed out, and that's when it starts to participate.
You had very aggressive targets for the S&P and Bitcoin by the end of the year. I mean, it'd be crazy to hit the Bitcoin targets, but 7,000 on the S&P is still something you think that can happen this year?
Yeah, I mean, 7,000 is only 2% for S&P. From here, I think 5% or maybe even 10% is possible in December. So I think a 7,200, 7,300 is likely for S&P.
How about Bitcoin? You'd be happy with 100 if it got back by the end of December, wouldn't you?
Yeah, in fact, I think it was looking good, like you said, over the weekend, and then we got a decline, sorry. Maybe because the Bank of Japan looks hawkish. Yeah. But I don't think the 4-year cycle, I don't think the Bitcoin high is in place. But you're right. We were too optimistic about this happening by December. But I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to. And that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models, the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
Is there a point where a Fed that's too dovish scares the markets because they're worried about inflation?
Yes. The markets don't want the Fed to lose credibility. And the bond market will kind of protest if the Fed is too dovish. But I think when I look at Fed fund futures, especially implied inflation, the bond market's more dovish than the Fed. So it looks like the Fed is behind, and that's why I think cuts are necessary. To me, the fact that claims have been behaving and the September jobs report kind of showed a bit of a recovery. I think the labor market's probably holding fine, but the Fed doesn't want that to worsen.
Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet.
Markets kicking off December with losses, though, even after last week's big rebound. Historically, December has been a seasonally strong month without much volatility. Will this December prove to be the same? How do you see this market shaping up right now into year-end?
Look, I don't think this December will be awfully different. Actually, when we look at the December Fed meeting, most likely they are going to cut. I don't see really much change from the Fed there, and also in terms of language. So that probably is pretty supportive. But overall, I think perhaps markets and investors have extrapolated a little bit too much of that November sell-off, or should we call it mini correction, particularly around crypto. We've had an awful lot of questions around what this crypto sell-off means for equities. trades. And fundamentally, there isn't an awful lot to do, really. In fact, what this correction has done in November, it's brought back really a lot of our shorter term positioning signals back towards sort of buy territory. So a lot of short term hedging going on, VIX futures curve, put call ratio, option skews, all of those things really a week ago flashing and still being closer to a buy signal rather than a sell signal. So that really should mean all clear for a year-end rally.
Interesting. So would you be tilting towards risk on here after the rotation we saw in November?
Yeah, absolutely, 100%. So, I mean, we've been saying last week, look, this is exactly the sort of non-fundamental dips that you should actually be hoping for. In reality, you know, when we speak to investors and they say, you know what, yeah, we probably missed the rally a little bit, but we're waiting for the dip and we'll buy the dip. We're buyers of the dips. You know, I think the worst dips are the sort of dips where you say, well, it's perhaps as a reaction to, like we've seen right now, the reporting season, where perhaps, you know, the earnings beat rates are much lower than expected, and then you start to question the fundamentals. Whereas when you look at it this time around, it's sort of, you know, our tech companies, our AI companies that are mostly single A and double A rated, you know, are they issuing already too much debt? That makes fundamentally not a lot of sense. You know, this crypto sell-off, all of this stuff really hasn't made an awful lot of fundamental sense to us.
Well, I mean, to some people, the rise in crypto didn't make a lot of sense either. But I'm curious why you think the sell-off isn't sustainable, given that we're up about almost 16% year to date. And there are these questions about what the data really say, because we haven't gotten all of it post shutdown. And we've got this holiday season to navigate where some people still have questions about the consumer, particularly the working class consumer.
Well, I would say when we look actually at somewhat higher frequency data on consumption, that still looks like the U.S. consumer is not only in a healthy state, but actually is still rock and roll. Look at the Chicago Fed's cards data that's been going up despite the government shutdown. When you look at weekly retail sales, they've actually been rebounding in the last couple of weeks. Even Visa Spending Momentum Index has been rebounding since summer. We've heard from numerous retailers that Black Friday sales were actually quite good. So I would argue that not only is the U.S. consumer pretty resilient, but it's probably looked, at least that's what the high frequency data is telling us, it's probably looked through the government shutdown noise.
Okay.
And the only other thing fundamentally that also has changed in November is that earnings estimates for Q4 have been slashed even more. So we have a setup where fundamentally consensus again is questioning the earnings backdrop.
Over the last couple of years, a number of folks have been saying everyday people should have crypto, Bitcoin specifically, as part of their portfolios. With this volatility, is it just another risk asset, or is it potentially more prone to volatility because of the leverage out there?
Yeah, look, I think what this is showing is that actually this is even more positive for gold rather than crypto, right? We have this whole debasement, or this talk about debasement trade, and this talk about the end of the dollar as a reserve currency. Now, I don't believe in that at all. But if you want to hedge against it, I think what it has, you know, what it really has shown in the last 2-3 months is that actually the proper debasement, the proper de-dollarization hedge, if you want to hedge against that, is probably much more in precious metals rather than in crypto, given there's much higher volatility and given that, you know, there might be some regulatory burdens. Now, I don't know whether they will come true or not.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology. And if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.